All right, so thanks everyone for joining us today. My name is Paula Garibay and I'm the Project Manager of Economic Development. We have Jorge Reyes from Wintrust Financial, who will be presenting on business finance basics. I'll let him introduce himself in a few minutes, but before we get started, I will go through a few updates and background information on the Cook County Small Business Source. So welcome to the source. This webinar is brought to you in partnership with the Cook County Small Business Source, the Berwyn Development Corporation, and of course, our presenter, Wintrust Financial. So an overview of the source. The Cook County Small Business Source is a network of resources made up of over 30 partners who are located across Cook County, readily available to meet your business needs. Our goal is to provide one-on-one business expert advising with business owners, group advising, kind of like we're doing today here in this webinar form. And we also host a variety of events where we come together with community partners, Cook County representatives, and other business owners like yourself to talk about challenges that businesses are facing and connect you with resources that are available free of charge through the Cook County Small Business Source. This program began as a result of the COVID-19 pandemic. The county was looking for a way to support small business owners. Of course, I'm sure you have all been impacted in one way or another, your business and your personal lives, your family and friends. So the Cook County Small Business Source was formed to provide some relief to small businesses who were impacted by the pandemic. We do strive to provide resources to minority-owned businesses, businesses located in disproportionately impacted areas of the pandemic. And through that, we have been able to reach over 10,000 businesses. $17 million in grants to date have been distributed across Cook County. And of these businesses, most of them have been micro businesses, meaning they have 20 employees or less. And of these businesses reached, 3,800 of them have received direct assistance with one of the business support organizations sitting down, having a one-on-one technical advising session, providing business support, helping you apply for a grant. Those are the kind of resources that we are here to provide. Of these businesses, as I mentioned, we do strive to support minority-owned, women-owned, people of color-owned. So 63% of those businesses have been impacted, 53% of them being women-owned businesses, and 78% of them micro-owned. The Berwyn Development Corporation is a proud partner and business support organization with the Cook County Small Business Source. On the screen here, you'll see a couple other logos of some of the other support organizations that are part of this program. You may recognize some of these names, also readily available to provide support to your business. So the Cook County Small Business Source did release the Grow Grant back in October. If you recall applying for that, it was a pretty short deadline. You had to get your application in by the end of October. Originally, we were expecting to hear back on the status of your grant and whether or not you would be receiving the funds by the end of January, but we did receive an announcement from Cook County that the timeline is now looking like applicants should expect to receive a response by the end of February. So hold tight and expect a response directly from the grant administrators by the end of the month. But in the meantime, you can go to the Cook County, State of Illinois Corporation LLC search to make sure that your business is in good standing. So if you are a corporation or an LLC, you do need a certificate of good standing to be eligible for the funds. But if you're a sole proprietor, you don't need to worry about that. You do not need a certificate of good standing. We will be sharing the link where you can go verify that along with this slide deck at the end of the presentation. So if you have any questions, we'd be happy to assist. And then I will be handing it over to George here shortly. Just if anyone has any questions throughout the presentation, please feel free to drop them in the chat or raise your hand. We will be monitoring to make sure that we can get you some responses here. So I'm going to go ahead and stop sharing my screen, George, so you can take over.
Wonderful. Can everyone hear me okay?
Yes.
All right. I think, give me a second. I'm not sure because I've been having some technical difficulties. Did everybody see the slides that Paula was walking through? Is it changing for them?
It's not changing for me. It's just
Okay. I think,
static. Now it changed but then it went back to static.
okay, well, I appreciate, hi, Hillary, how are you? My name is
Hi.
George, my name is George Reyes.
Good.
So the good news is everybody's gonna get a copy of this deck after today's Zoom meeting. This is our second in partnership with BDC. We love the team. I've been with Hinsdale Bank and Trust now, which is a subsidiary of Wintrust Financial Corp here in Chicago for the last 5 years. I've spent 15 years in the business banking space for a couple of different institutions out in California, and then came back home. So I'm originally from Chicago, and I've been back now for over 6 years. The reason I love my job is I help business owners, whether they're starting their business or they've been in business for several years. I care as much about the story and the numbers as any great banker. I grew up in banking. My mom was in banking, so I know that every business owner has a unique story and approach to their business. And my job is to relate that information to my colleagues internally and say, hey, this is why I really believe that we should be lending money. And so my background has been in SBA, traditional conventional lines of credits, term loans, real estate acquisitions, construction, and equipment loans. When I say real estate acquisition, I'm the kind of, and this is essential to what we're going to be talking about today. So today we're going to cover a lot of ground over the course of an hour or so. Just depends on everyone's kind of questions. I do want you guys to feel free to stop me whenever I'm covering something, and I'll do my best to allocate some time. And then if we get a little bit in the weeds, I'm always available offline in terms of really niche-y, complex questions. But going back to the real estate acquisition, if I know this came up in my last conversation when I presented this loan, if it's, hey, George, I want to become a landlord and just buy investment property, that's geared for a kind of a different. I can still elaborate somewhat on that. But if it's about acquiring rental property, investment property, I have colleagues internally at the bank. They'll be asking for a lot of the same financial information, but that's kind of a different wheelhouse than what I'm used to. I'm more so if you want to buy a building for your business, I'm the person you talk to. So with that said, like I said, I want to take our time. So today's purpose of the seminar is for getting the basics of business financing, what it takes to kind of start a business, grow your business, talk to lenders and people who are willing to give you money. And so we're going to cover a lot of ground, but where we're going to start is the essentials of what is business financing and how you can go about it. The two first big basic differences between why you come to a bank versus going to another route, equity financing versus debt financing. So equity financing can take a lot of different looks. You could look at venture capital financing. You could look at angel investment. You could do crowdfunding. Really, there's a multiple array of ways you can do that. But what you're doing is you're selling portions of your company in exchange for a cash transaction. So if I was to say, hey, I'd like for you to invest in my company, I'll give you 10% or 5% or 1% in the form of XYZ dollar amount. So you could raise capital that way to get your business up and running, especially if you've seen like the shows Shark Tank. I know is a big one on ABC, where they're going in front of a panel of people, hoping that either they're going to start their business or grow their business, and they're negotiating what they're willing to give versus what they're willing to take. So that's equity financing, and it comes in an array of different formats. Then you have debt financing. Debt financing is completely different in that the person that's giving you that money has zero control or ownership involved. There's no skin in the game for them from a standpoint of they're lending you money for a specific time, and you're going to pay it back for a specific payment at the end of that. So how the debt financing works can, again, be a different, you can do SBA financing, conventional financing, you could do term loan financing, you could do a multiple different way, working capital financing. There's lots of ways to finance that or get that finance. It just depends on what you as a business owner are looking to do. And once you decide what's best for you, then you can go about getting that. And you can take the equal concepts of the documents that we're talking about today and apply them to either or. And so then once you understand that, what are you going to use the money for? Whether you acquire it through equity financing or debt financing, what you actually do with that money is the second component of financing working capital versus fixed assets. So how you spend that money. So if you were to say, hey, George, I just raised, $2 million. I'm going to use a portion of that to buy a building. I'm going to use a portion of that to grow my sales team by 5-fold. So those would be an example of a fixed cost and a working capital cost. So you have two different scenarios there. And once you have that down, then you can start to formulate a game plan as to where you're going to go about looking for that. All right, looks like no questions so far.
I have a question. Where do you find the person or the place that can answer or can tell you what it is that you need? You should do this, or you should do, your best option is this or that. Because you can go around to 10 people, but is there one place you can go? Are you available?
So I get, and we're going to get into this. I'm the person you go to for the bank financing, the debt financing. So I do interview entrepreneurs and talk with entrepreneurs in terms of, okay, what is it that you're looking for? And we're going to go into the parameters of what it takes to get money from an SBA program, from an equity financing program. That's outside of my wheelhouse in terms of, if you were to just do some quick Google searching, you can find yourself an array of different, here in Chicago, there's endless amount of people out there and organizations out there that are, interviewing. So I'll give you an example. I believe out of the Merchandise Mart, there's an incubator where, and I can see if I can dig up the information where people go to pitch their ideas and concepts, and then they get approved through a committee process where potentially there can be some equity financing options. But yeah, from the debt financing, I'm the guy, Hillary.
Okay, so collateralized financing.
Collateralized.
Do that. Yeah, good.
Yep.
Thank you.
So business financing do's and don'ts. These are as we go along. So when you review this at the end of the day and you're rereading this, it's kind of going about it one by one. So do invest your own money, but we'll talk about this. Keep track of that money and make sure you don't use all of your money before you come talk to somebody when you say, oh, geez, I don't have enough. I thought this would get me through. So there's a do and a don't.
That's me.
Right. Are you flipping through the slides?
Yes. Are you seeing them?
No, we're still on the first one. So
You're still on the first one. I'm in the same. Okay. How about, give me a second one.
it might be the screen that you're sharing. I don't know if you have it open
Yeah,
on
I'm gonna go
two.
back to, let's see, how about,
Where I see it in business finance. Oh, now it's gone again.
it's gone again?
Yeah,
You're moving forward.
Is it?
You're on the screen that says a little bit about myself.
Okay, great. And then now are we on
Business financing, the do's and don'ts for small business financing.
Right.
That's where you are.
Perfect. That's why I like it being interactive. So that way we know that we're on the same page.
Okay.
So investing your own money. If you do go invest your own money, you want to make sure that you keep track of that money and talk to somebody before you spend all your money. Earn the right to borrow, meaning understand, that when you go and ask for money, they're going to ask you questions like, well, how's your credit? What's your cash liquidity position? What's your, it's going to feel very one-sided at first because, when you start a business, you're going to find yourself telling the same story over and over again because they want to get to know who you are and what you're doing in order to be able to qualify. Show profitability. Once upon a time, I worked for my father who ran a grocery store, still has his grocery stores. But between us, he was the kind of guy that would be like, oh, I don't need to report any of this. It's like, So the rule of thumb is if you go ask for money from any lender, debt, or they want to know, is your business profitable? And you're going to want to show it on your tax returns and in your financial statements. Understand and keep working capital, meaning, for the times that are great, set some aside for later on when times are not so great. We're in a crazy environment right now where inflation's running rampant, and the ones that saved and were disciplined in their approach are doing better than the ones that spend money and maybe, and again, to me, it's about making sure that you have a firm understanding of your money coming in and your money going out. And so that's why I do always keep that into consideration. Be lean on your fixed assets. Does that car have another 2 years on it? Does that machine have 4 years? Do we need to just do a quick service on a printer? Make sure that we're not doing crazy one-time expenses. Matching your sources and uses of funds. Again, I get this all the time from my bigger clients where, we put an order in for something and we thought it was going to be X, but it turned out to be, substantially more expensive. So, that's where making sure that you keep that into consideration. Now, for some reason, now it's not, let me see. Do you guys see? Let me see. There we go. Why is it not? It's not. Let me presenter mode. Okay. Can you guys understand your financial statements?
Yes.
Okay. Understand your financial statements, meaning your P&Ls and your balance sheets and your cash flow statements. What are they telling you? Because I, the business banker, don't know your business as well as you do. You're the person who tells me, hey, George, here's what my business did in the last 2 years. Here's where it's going. Here's what the numbers tell me. And so that gives me insight to what's happening to your business. Understanding your collateral options, meaning, what if you're looking to make a move, let's say, for instance, you're going to acquire a new piece of equipment. Do you need to pledge business assets? Do you need to pledge just that equipment purchase? Those are key leverage, negotiations of saying, okay, what is exactly the risk reward? And that's why the third bullet point, the understanding the risk and the cost for those loan types. There's always, when it comes to getting money, the devil's in the details. Some SBA loans require a second mortgage on the primary house. So that's potentially risk reward from a standpoint of you'll get financed. However, you might have to be willing to put a second mortgage on your primary residence. And so just understanding what it is that's involved, it's always in the details. No grants. The reason no grants is, I know we just talked about grants right now, so this is actually very key. Don't rely on grants to get in on a timely basis, because if you've been waiting for this one from the Cook County, while I think it's a phenomenal program, you should never rely on just grant programs to get through tough periods, because they're notorious for either taking a little bit longer than they should have and or not getting as much. So, but I am an advocate for applying for grants. I am an advocate for looking for programs that are, about non-repayment. So especially during the last 2 years, these government programs have been essential for some of these business owners to stay afloat. So I just tell people, just be cautious in that. Don't put your eggs in that grant bucket. Don't go buy something thinking that the grant will come through to offset it. Shopping around from a standpoint of the dues of shopping around is do talk to bankers and or different of the same one from a standpoint of if you're looking for the equity financing or the debt financing. Always talk to 2 to 3 people, but don't go applying to, it's not like the mortgage industry where you can apply for 3 or 4 houses without dinging your credit. When you apply for multiple commercial loans, you're gonna see those dings on your credit. And sometimes, what I hear is, hey, I applied for XYZ institution, I never heard back from them, or I didn't, get approved, and all there was an email communication. The unfortunate part is there's a lot of unsavory characters are out there. So I just caution people to not run their credit before talking to a person from that financial institution to say, hey, I'm looking to do a startup bakery in Berwyn. And then turns out they don't like startups in Berwyn. So that's why it's prudent to have a conversation before applying for credit. And that's why it's great to get expert advice from the SBA, your bank, community credit organization. Get as much information as possible prior to actually going about it. So that kind of jumps us into how do you get ready for that conversation? Because I will tell you that we bankers are very short on time right now with the economy being the way it is. We're managing through our customers' pains and our customers' issues with supply chain issues. And so when we do have conversations, it's good to get everything ready to go from a standpoint of having a business plan, knowing what you can afford, studying your financial statements, check your credit report, establishing collateral options, showing your equity contribution, and researching your financing options. So let's spend a little time on this slide, because I think this is the essentials. If there's anything else you're going to take away from today, is this slide is this slide right here, because this is everything that you need to have a really in-depth conversation with the person sitting across from you. So if anyone's filled out I'm going to switch gears here and just show a template of a business plan. So if anyone has a business now, or how about this? Let me ask the question this way. How many people in this call are looking to start their own business? Let's see, I'm not seeing. Okay, so I'm not getting any responses. I'm guessing no one is starting a business per se, so I won't spend too much time, but basically this is still good if you already have a business. This is a business plan template provided by SCORE. SCORE.org is a non-for-profit organization that's nationally recognized, that has a volunteer support group of individuals and entrepreneurs who help other entrepreneurs grow or start a business. And so this is their business template. It has all the key essentials from a standpoint. Here's the table of content. It tells me who the company is, the executive summary, tells me what the company does, company description, the products and services that they're selling, their marketing plan, how are they going to go about getting customers in, their operational plan, how are they going to go spend the money, their management organization, who's doing what behind the scenes, startup expenses, capitalization, a financial plan, and that's it. Those are the nuts and bolts. You can do your own business plan on your own template. There's no one rules them all. I've seen them come in slide decks. I've seen them come in Word documents, PDFs, but all the essentials of your mission statement. What do you do? Why do you do it? Your vision statement, what values do your business live by? Who is the company's long-term outlook? So, this to me is what, when business owners wake up and they go about their day, what it is they're going to do is why I want to listen to them is what makes them different, what makes them unique, what's their differentiator in the marketplace. So this example, I believe, is 10 pages. No, it's more than that. This is the bigger one. This one is roughly 30 pages, which I forwarded to Paola so she can share with you what is the website to get the business plan. So it's score.org for Mohammed. The example will be in the link as well at the back end. But that website is where I pulled this from. And like I said, I do have a local contact with SCORE. If anyone does want to see if they can jump on his schedule for a session with him, with John, I'll make sure that I relay that information over. Looks like we got another question. Okay, good. Okay, so now let's switch gears to another of the documents. So along with the business plan comes projections. So these are projections. This is the same organization. This is score.org's projections template. In the first one, it actually tells you exactly what you're going to do. There's directions right here on the left-hand side where it tells you what's going to go where. Entering data is in orange. Adjust as needed is in a lighter orange, just to make things a little confusing in case you're using it. So basically here on the bottom, you're going to have all the little tabs that tell you where to enter what information. In this example here, you got payroll in year one. So you got, you know, what's the number of owners, how much they're going to get paid. And so what's nice about this is that, let me see if it's going to, I don't know if I'm going to be able to edit it. Here we go. No. Oh, sorry about that. I think did that stop sharing? Can everybody see the?
No, it's back.
Okay, now it's back. So that kicked it off. So basically, I just want to show one quick example of one. So if you pay somebody $50 an hour, they work $40 a week. What's really nice about this template, it fills it out. It does the work for you. So when
nice. Where do you get this?
So this is also in score.org.
Cool.
And what we'll do is, Paolo, I'm not sure if you're okay with it. If you want, I can we can forward the email as an attachment or however we want to do it, because
that would be great. What is this called?
This is called a financial projection spreadsheet. So here's what I'll do. You know what? Let's do this. I figured this was going to be a hit. So let's do this really quick. I'm going to share. So score.org.
Yeah, we dropped the link in the chat, and we're also gonna send a recap email with the document. Let me see if I can drop it in here. I don't know if it'll allow me to attach that large of a file, but you will all get access to this in the recap email. I'll try right now.
Yeah. So again, the reason why those are essential, when you go looking for financing, you'll find that those two work in liaison with each other from a standpoint of your business plan should mirror your financial projections, and that you know, you're going to say, hey, I'm going to have 30 employees that are going to work full time, and so you'll map them out. So you'll say 30 employees at $15 an hour, working 40 days a week. It'll work that out. And
That's
or
great.
Fixed cost, which is what I look for. Let me see here. So it does sales.
Does it calculate taxes?
So this one does, but you're going to want to, especially, you know, when it comes to state unemployment tax, you know, that, so it changes year to year, but this will get you close enough. What you'll want to do is when you put one together, you'll just want to maybe talk to someone in that specific field. So like somebody that I would talk to about my projections would be like a person or individual who works in payroll. So ADP, Paychecks, Paylocity, any kind of an organization like that. Those software systems stay up to date in real time with what taxes are at that point in time. And so, and then there's an array of other reasons why you could choose to work with that. But great question, Hillary. Like I said, I think it's up. Like here, the state unemployment tax is at 3.45. Again, don't peg me on this, but I'm pretty sure it's higher than that now. But then the other thing I want to show you that's essential, we'll talk about this later, cash inflows and cash outflows. This tells me, does your business have seasonality? How much does your business collect, and how much does your set out? So all of these, this is basically what I love about this. This is a powerhouse of a document. It gives you all kinds of, so if you've been in business, I'd even recommend putting one together and to compare and contrast with what you thought you're making, because that's usually where I find people say, you know, they come to me and say, I need a line of credit. This is where if they can show me a document that shows it, and I'm like, oh, wow, I can really pinpoint. So I'll give you an example. I have a few customers in the healthcare industry, and their medical billing, the way they collect, it takes a lot longer than when they service. So they're not getting paid until usually 120 days after they've seen their patient, which from a cash flow perspective is very negative. But the good news is when they do get paid, they get it in big tranches. So they're able to stay afloat and able to make good profits. So let's go ahead and kind of get back to the slide here. So everybody will get that in their mailbox. Now let's share the slide again. Okay, so let's go back here. So again, so if you fill those out, then you'll know what you can afford. So basically, you could do some really quick calculations. There's a ton of loan calculators out there. So let's say after you've done your plan and you say, okay, I'm going to need probably, let's just use rough numbers, $100,000 for working capital and $200,000 for a new piece of machinery that's going to produce more money and save. So once you get those elements down, you don't necessarily know the exact number. Like you would come to me and say, George, I need at least X, Y in order to make Z. And then we go through that conversation together about what the qualifications are, what programs we have available, what the interest rates and the terms would look like. And so that way you don't have to apply. We both sit down and have just a transparent conversation about what it is that you're looking for. So again, these are the common elements. I'd ask you for a business plan. I mean, if you haven't been in business, then you're going to look at projections. If you have been in business, I'm going to ask you for P&Ls and balance sheets along with tax returns for the previous 2 to 3 years, depending on the request. A personal financial statement, meaning you, the business owner, you have your own assets and liabilities aside from the business. So we have our own proprietary PFS template that I'd email you and ask you to fill out and then bring it back to me so I can see your viability personally. And then that's why also the request for business and personal. So if you're a small business owner, typically you'd be used to your institution asking you for those. And I get the question all the time, like, George, why are you asking me about my personal? You are the business, unless you're publicly traded and or privately owned, but a huge organization, you're going to be asked for the personal because the bank risk is on us to make sure that the two of you are as healthy as possible. So we have to look at both the business and the personal simultaneously to make sure that everything is viable. Okay, so then once we get the elements of the package, actually this is continuing that conversation. Sorry, I thought I titled this one different. So source and amount of equity contribution. So meaning that's geared more for a startup business where if you're going to take on business debt from the bank and then your sweat equity, your cash contribution, and or if you raised some money and you're like, hey, George, I've got XYZ, I've got $20,000 and I need to borrow $80,000. Okay, let's see what we got. We'll look at your credit report from a standpoint of one bureau. So typically in commercial credit, there's no FICO being pulled. You're going to get one ding on one of those bureaus, whether it's TransUnion, Equifax, or Experian. I know that in the recent 5 years, Experian has what they call business credit, but I don't really see that come through from my own private personal experience. Is that business credit is rare in the industry, and if you do have business credit, that's great. That's a bonus. I just know that old school methods like Dun and Bradstreet's are probably more available for lenders to look at. Collateral again. So depending on the request. So if you're going to be using SBA financing and you're like, George, I'm going to lease the place out. I want to put a bakery in this building. I'm not going to buy the building. I just want to put a lease there. And there's really no collateral involved because you're going to be buying, a couple of trays and some pieces of machinery, but the request is both for working capital and fixed assets. I'm going to say, well, do you have a personal home that you could pledge as collateral? Is there any availability of equity? So that would be an example of a collateral request. And then finally, what else? So if we are buying a building, then you're going to have a purchase agreement. You're going to expect to see that we're going to order an appraisal. We're going to order title. We're going to order environmental. So in Chicago, There's a lot of mixed use properties, and that's kind of what I've been working on most recently. And what I can caution people on is landlords and sellers are trying to make every dollar they can right now on exchanges of property. And what I can tell you is that, be adamant about your budget. So if you have talked to a banker and a lender and you're like, okay, I can afford, let's just say $100,000. Well, make sure that you're not going to go over budget because you really want the place. Stick to your budget, stick to your guns about saying, this is the money that I have to spend, and I need to make sure that I use it wisely. Because what I can tell you is that in the last year, some of these appraisals have not come in as strong as they used to, because now things are starting to settle with the change in the market and with the higher rates. So just be prudent when you go out there and you start talking to real estate brokers about, what it is that you're looking to do. So qualifying for a loan, what's the criteria? So rules of thumb: good credit scores. Good can be interpreted very differently from institution to institution. If you go on Credit Karma, Credit Sesame, any of these credit monitoring sites, they usually do a good job of telling you what your score is in equation to overall, best being above 780, good, great being between 720 and 780. I believe it's 680 and 720 is classified as good. And then, 620 to 660 needs some work. And then anything under 620, you start getting into the hairy parts. I'll say that, score is important, but also character on your score, because scores can sometimes be a little misleading, both good and bad. Good in that if you, let's say, missed a payment, you can recover from the score from that ding. However, that stays on the credit bureau for 7 years. And, a lender can say, well, you've missed, 3 payments in the last 7 years. And they can say, well, yeah, while your score is good, the history of the credit might be an issue. So on the reverse side, score could be bad because you just used up all your credit card available balance because you had a cash crunch. And now your score, even though you're making your payments, you've been historically great, your score went to the tank because you just used more than 35% of your available credit balance. In that scenario, score is bad, but overall, I would say that you want to talk to a lender, or if you're in a cash crunch and you have to use credit card debt, first understand that if you use all your available balance, your score is going to dramatically drop almost precipitously. But then if you pay it off, it also rebounds precipitously. So, that's kind of where credit has a basketball kind of reaction to it. So I wouldn't get so fixated on score. I tell all of my clients just to check in on their credit once a quarter, so that they get in there if there's any fraud out there, and or if an agency misreported. Have good credit is the name of the game. Equity contribution. So again, if you went and started a business in the last year, you're like, oh man, I'm going to need some financing. Keep your receipts. If you spent $5,000 on a lawyer, if you spent $3,000 on a piece of machinery, those are equity contributions. The bad news is the SBA, depending on how recent and what, if you've already spent the money and you've been in business for 3 or 4 months, it's going to be hard to use that as a equity contribution from a standpoint for a loan application. But you want to be ahead of the 8 ball and have that money set aside for specific purposes. And so making sure that where you spend your money for that business is allocated. Repayment ability. So showing that if I was to take XYZ loan, that I can repay it over the course of the next 5 years. So this goes back to the profitability. If you've been in business for 2 years and you've been showing some really healthy profits, well, we're going to analyze how much you can afford through those profits. So the rule of thumb is you want to have about a 120 buffer, meaning that I want to have about for every dollar that I spend, I want $1.20 in profit. And so you want to be able to show that I can afford this this payment on this loan and still have money left over. So that's why the profitability and the repayment is so important. Then you're in the loan to value ratio. So, depending on the type of financing, on the commercial side of things, SBA loans can go as 10%. Equipment financing, I have some competitors in the market that can do 0% on equipment financing. That's not necessarily the case across the board. So every lender, every institution, every program has a different kind of component to it. For startup, for an SBA 504 loan, the minimum is 15%. And so you want to have that ahead of time. So if you know that you're going to go needing financing, you want to be very specific about your ask in terms of who you talk to. You want to say, hey, I'm looking to buy this building. How much should I expect to put down? And so that's where they'll be able to direct you to, kind of what the parameters will look like. Let's see. Looks like, okay. Does everybody see startup financing? Okay. So what are the financing options for a startup business? So again, we go equity, meaning yourself, your money. You take money from your own hand and you use it for your business. Sweat equity. Not only do you move money from your personal to your business, you're also working for the business. We don't see.
But I don't think we see that.
Okay. 1 second. I'm having all kinds of issues today. All right. Let's see. Okay. Okay, can we see equity, sweat equity?
Yes.
Okay. So sweat equity is not only you're working your daytime job and then you come home to do your nighttime job. That's considered sweat. If you're working for the company and not getting paid, that's sweat equity. Business credit cards, personal credit cards, because there's a fun little tactic that I've seen it happen where they solicit them as business credit card, but they're really just personal credit cards. That's another way that you can use. And then friends and family. If you've borrowed money from anyone and said, hey, help me start my business. Those are ways you can kind of get that going. So when you're looking for a loan, where should you look for a business loan? I want business loan to be big and bold, because this goes back to matchmaking. I don't know if you guys saw our CEO just announced that he's stepping down, and Cranes ran a fabulous article saying why we are I'm going to toot our own horn right now. We're one of the last commercial banks that operational headquarters is in Chicago, in the Chicagoland area. So we pride ourselves on being a commercial lender. We pride ourselves on being able to lend to local business owners. And this is why I show up to work every day, is that we're in the communities and we want to serve the communities that we operate in. So that's why when you're looking at banks should be an asterisk from a standpoint of, not every bank is going to fit the need. And so if you look at it from the lens of, if you walk into your Chase to ask them for a business loan and you get an 800 number, maybe it's not the right fit, right? So Mom, I'm just going to mute you real quick. I'm getting a little background noise, but feel free to drop me a ping. And then regional lending organizations. So for example, the BDC, they're a phenomenal partner, especially for individuals that live in Berwyn. I know they're growing their roots, but like BDC, there's a few other ones out there, but typically they serve the community that they're lending in. So key points to remember: financing is getting the money you need to start, operate, or grow your business. There has to be a reason. Just getting money for the sake of money, usually not a good start. Starting with a budget, always start with a budget. Make sure that, when you look at that new thing that you want to get, how much is it going to cost? How much money can I make off of it? Whatever the decision is. Sound bookkeeping is the basis for all financial management. You are only I will say, like, not every butcher makes a good, owner of the company, or not every good mechanic makes a good car shop owner. if you're an entrepreneur, you wear many hats, and one of the most important hats is the financial hat, is having a firm understanding of your finances. Purchase and learn how to use your financial management software. If you're the kind of person that doesn't want to read financial statements all night long, QuickBooks, QuickEd, all the softwares that are out there are great platforms to utilize that will help you streamline that. Even POS systems like Square and PayPal, all those have really awesome software as well. 3 statements that are the backbone of any business: balance sheet, cash flow statement, profit and loss. Those are the 3 that I first asked for. Accounts receivable, accounts payable, payables. Those are ancillary and they tell me a deeper understanding of the business, but the 3 that I always go off of are those first 3, and you'll have those asked from you repeatedly. Separate your personal and your business records and funds. This happens a lot more often than you guys would probably imagine, but having like your Netflix subscription go through your business account, not a best practice. Having your personal gym go through your business account, also not a best practice. You wanna separate your business from your personal as much as you can, so that you get a truer understanding of how much money your business turns. And so factors that affect your ability to get a loan, again, is that credit score, your equity contribution, your repayment ability, and your loan to value ratio. So those are the in a nutshell, the things and the metrics that the institution is going to look at for approving your loan.
Can I ask a
So
quick
this is
question?
a deeper, sure.
Quick question. Thank you so much. I just want to quickly circle back to the types of banks.
Mhm.
Would you recommend having multiple relationships with different bankers? Maybe I'm doing a community project and your bank would be more suitable for that. So I create a relationship with you, and then one of the big 3 banks, I have a relationship with that banker because of this need. How would you recommend spreading that, or does that not look good?
Great question. I'm sorry, what's your name?
Melissa Fuller with
Melissa,
MTC
thank you.
Properties One.
That's a great question. So the banker in me, I will say that when I go to talk to a new prospect, I let them know that we're not a transactional bank. We want the full relationship. We want the operating account. Do all of my clients subscribe to that? No, there's something that we internally call like a share of wallet. Understanding which, if you're going to have multiple different ones, being transparent and saying, hey, George, I need to use Chase's technology, because I'll tell you this right away, is that's where the friction lies in those details. I'll tell you a quick example is that I had a prospect who really utilized Zelle pretty much every day to send payments to their vendors. And so I, at Wintrust, do not have Zelle for Business yet. We're still vetting it out. So it wasn't a fit, but the gentleman was able to say, hey, but I'll give you my other business. There was a couple different layers. Why don't we focus on this one where it doesn't rely on Zelle? So I think, any bank is going to ask for the full relationship. Being transparent about what you're willing to do is prudent, because it'll tell you exactly where they stand and where they fit. Give me one quick second. Sorry, guys, I'm at home. My little one is sick. If you just give me 2 quick seconds, I'm gonna just pause really quick.
If anyone else has questions, while George is stepping away, now would be a good time to drop them in the chat.
My apologies.
Sorry about that. Okay, never a dull day. I have a little 6-year-old that is home when she's supposed to be in school. All right, let's resume. So I hope that, did that answer your question? Okay. Okay, so can everybody
Yes, it
see?
did. Thank you. Thank you.
All right, and to finish that thought, so there are specific, I'll give you an example, SBA lenders who are transactional. You'll get an SBA loan from them, you'll sign on the dotted line, they don't have any interest in getting your operational accounts, but then they'll sell your loan on the secondary market. So there's the pros and cons of, do I want a relationship bank? Do I want a transactional bank? And that's really where the rubber meets the road, and there's a shoe that fits everybody. Going back to financial statements and balance sheets. So balance sheet is a specific set in time is how you pull this report. So today I pull a report and it's going to give me my assets and my liabilities. So it's what I have versus what I owe. So in this example here, what I have $10,000 of cash. I have $25,000 of equipment, $20,000 worth of inventory. That gives me a grand total of 55. On the liabilities, debt, I took on $20,000 from a loan, a person, whatever it is, I'm repaying back $20,000. I also took $35,000 out of my own pocket, 80 owner's equity. So I took it from my savings account and I gave it to the business. An account will tell you the business owes you that money. So now you have 55,000. So your assets and your liabilities always match. You can't be off on the math. So if you have $50,000 in assets, but you have 55 in liabilities, your numbers are off. You're going to want to go back and see where and why they're off. And so you could set that for points in time. If you've been a business owner for let's say the last 3 years and you've been inundated with COVID, well, you can set a point in time and say, what was my balance sheet like back in 2021 versus 2022? So that way you can analyze that and you can see where things have changed and where money went. So that's the nice thing about the liabilities. It'll generally show where you spent your money. What is cash flow? So going back to this and saying, okay, it's how much money has been received and paid out over a period of time. So it's money moving in, money moving out. One of the easiest ways you can do it, you can take your business banking statement and you can look at deposits and then you can look at withdrawals. And you subtract the deposits with the withdrawals and you can get a number that tells you whether or not your cash flow positive or cash flow negative. You always want more deposits than withdrawals. I'll tell you guys that much. But not all the time, not all year round. I can tell you right now, like my contractors are typically a lot of money is coming out, not a lot of money is coming in. We're in the winter, we're not working on projects, money's going out. So that's a cash flow cycle of a period of time for them. So that's why these cash flow projections are so important. What do they actually tell us? A financial statement using assumptions for you. So it'll tell us future cash flows during a specific period of time, and it tells whether cash receipts will be sufficient to cover the project. So let's say, again, the company has been operating at XYZ, $3 million for the last 3 years. Times are getting a little tighter, 2.2. Okay, based on the amount of money that I have today, will I be able to get through 2023? And that's why these are so essential for the future of your business, is because it's going to tell you where your business is going ahead of time. And so they're going to help you set what can they do and how can they help you when you need one. They can set your sales and expense goals. It helps you determine your break even. So if I own a bakery, how many breads do I have to sell today in order to make ends meet? Anything above that, great. But it helps you understand exactly how much money you're going to be needing in order to keep things going. It helps you plan for future purchases, equipment. I call them, bankers will use this wording, capital expenditures, meaning you have one-time things that you need to go spend money on. So if your bakery truck has been used for the last 5 years and it's got 300,000 miles, chances are you're going to need to buy a new one. So you want to set that forecast ahead of time to say, okay, when do I need to make that purchase and can I afford it? And so same thing for inventory. They determine cash needs. So if you're in the business of buying specific goods and you get a deal, let's say lumber, I had this happen last year, more prevalent than any time before, where prices in material costs were spiking rapidly, and you find an opportunity to get something cheaper than it normally is on street value. Is that a prudent purchase? It could be. It can be. It's just a matter of determining whether or not it's worth spending the money. So that's why these projections and these cash flows are so essential to be able to help. And here are more examples. Tracking liquidity when accrual accounting mass cash realities, meaning that healthcare practice that I mentioned, it's on accrual basis because they bill for that visit, but then don't actually get that money. So when you do your accounting, accrual is money that you've allocated, received, but actually haven't received it yet. It's on accrual versus cash, meaning that I go to the grocery store, that's a cash purchase. They realize that income right then and there. So cash flow projections help kind of seeing through those one way or the other, whether you're on accrual or cash. That's up to you. You want to make sure that if you are an accrual, that you're actually collecting the money that you're owed. And it helps you determine the need for your financing. So again, all this information is just information that every lender that's going to meet with you is going to want to know. They're going to want to know this so they can understand the ability for you not only to be profitable, but also be able to pay back the loan. Can everybody see my cash flow projection sample? This one's a little tiny. Again, the one that they provide, the one that's on the score.org template has a real nice one that's bigger. And this example, you're going to be, putting in information on the left column, top to bottom. So once you do that, at the top, you'll see your sources of cash, where you actually got your money. So if it's your beginning cash, you have $10,000 you put in the company. Your cash sales, you sold 10 t-shirts out of your home. So you've got, $100. But then 100 more are being ordered. That's your account collections on accounts receivable. Interest income. Are you making money off of your savings account through the bank? Loan received. Did you take on a loan and you take proceeds from that loan? So if you got working capital, that's where you would put it. And then equity contribution. How much money have you put in from your wallet? So the top is where you got your money. The middle, operating cash, is where you're spending your money. Labor, wages, payroll, utilities, travel, all that good stuff. And then the bottom is your non-operating uses. So this has to do with the debt service. Where did you take the loan? How much are you repaying back? How much are you repaying back to yourself? So that's owner's draw. And then you have inventory purchases. So those are one-time purchases. So that's when you put these three elements, where your money's came from, where you're using your money, and then where you're using your money for future purposes, such as loan payments and future payments. That's where your non-operating cash is, uses of cash. It is an expense, but it's future dating your expense. So moving on. So now that we have our cash flow statement, we had our balance sheet, then we had our cash flow statement. Now we have our P&L. And the P&L is going to be everything in a nutshell from a standpoint of your cash flow. And it's going to help us understand that after everything's been said and done, how much money is the company making over a period of time. It tracks whether the business is making profit on what it sells, whether it's a service, a product. It's up to the business owner. So this shows, again, this is kind of a little redundant. It shows how successfully the buying and selling of the process has been managed. So we look at year-over-year trends. That's why we asked for 3 years of business historical. So we can say, okay, based on the information we have, we can expect X, Y, Z to happen in the future as best we can. It measures the ability to grow your business and repay the debt for service for you and support you. It's the most important report for your accounting software program. Yes, the reason why the P&L is the one that everyone asked for first is because it takes the holistic view of the business. It takes your sales, it subtracts your cost of goods sold, and then that equals your gross profit. So technically, that's still not the end all say all, because then you take your overhead and that's what gives you your net profit. That tells us that's the money, the net profit, what we can use to do whatever capital expenditure we're looking for, to lend the money. That doesn't apply. So this applies to anyone who's been in business for at least a calendar year. anything under a year in business, you're still going to be asked to do projection. You're still you're not proven yet. Even 2 years in business, sometimes it's still considered a startup. Don't take any offense to it. It's just what the lender and or institution is saying is that we need more information in order to say that you're proven in the business model. So I know that it's hard to get startup loans. And once you get in, you still feel like you're getting kicked down. It's all about having your documents in order. So the basic formula for a profit and loss statement. So net profit pays for your own, again, what are you using your net profits for? You can pay yourself back. You can say, okay, I'm gonna take that money, I'm gonna put it right in my pocket. Or you can take some money and put the other into expansion and equipment, or you can do a principal loan repayment, or you can do income tax payments. You can do a lot of different things with your net profits. And how do you get that? Super easy. You get them through, I think we might have, so these are all this one doesn't, let me, before we end, because these are all the resources that we use, but let me see, I'm gonna go back to, does everyone still have a little bit of time? Just for 5 minutes, I just wanna spend some time on a P&L statement. I'm just gonna go ahead and jump into it. So it's gonna be here from a standpoint of, so profit and loss can also be called an income statement. You might hear that be synonymous, one and the other. Income statement is the same thing as a profit and loss statement. It's going to tell me my revenues up top here. It's going to tell me my cost of goods sold. And then that's your gross profit. Sometimes it's called margin profits, again, synonymous. That's going to give me an understanding of how I do my cash flows. Then we're looking at our operating expenses, all the little things that cost us to open our doors, along with our other expenses. See, in this scenario, you have the commercial mortgage debt sitting right there. You have commercial loans, you have credit card. It's all broken out and itemized on an individual line basis. And I really like having that information because sometimes not everything is captured up front from a standpoint of your P&L statement. You're like, oh, George, you know what? We did take on a new business credit card. I forgot about that payment. And that's why it's really prudent to keep an eye on these things because those little dollars add up every single time. And so as you can see right there, you have your net income before income tax and your net income after income tax. And that's really awesome because it tells us exactly how much money is going out. Because as we all know, the government tends to, when we're making money, they stick their hands out and they need theirs too. So that's why this document and this Excel sheet that SCORE provides is really cool because not only does it do it for 1 year, once you fill it out for 1 year, it'll actually give you year 2 and year 3 automatically. You can adjust it. It sets itself, I believe, off of like a 4% increase to adjust with inflation. But that's the nice thing is that this document does everything. And here's the balance sheet. So when you're looking at this, here's your cash flow statement, right? On 6A, then 7A, that's your P&L. And then 8, there's your balance sheet. So there's all the elements that you need in order to go look for business financing. So with that said, we covered a lot of ground today. I know it could feel like a little overwhelming. These are hyperlinks that you're going to get at the last page where you can go and find yourself, in this example, I have QuickBooks, I have Monday.com. Monday is another resource for financial projections, NerdWallet, a ton of great information about where to get financing. And again, I'm here. I work out of the West Suburban location. So Willowbrook, everywhere as far west as Willowbrook, to Berwyn, and then as far south as I believe like Tinley Park and Frankfurt area. So that's kind of my general territory that I cover for Wintrust, Hinsdale Bank, and happy to continue the conversation with anyone if they want to. With that said, does anyone have any questions for me? All right. Well,
I can
I'll
stop
kick it
recording.
back.
I know I'm going to stop the recording. I know a couple times people don't want to share. So let me see.